Sticking with us and being able to understand more of the perspective of what we are discussing here, mainly about tax justice in the country, tax policies and taxation in general. And we are continuing with our last segment of the topic of discussion, and I'm still with David Chinto, and I'm getting the name right. Yeah. So David, before the break I wanted us to actually go into a discussion of how you people of this, the civil society organizations have actually, what have you done towards seeing that taxation improves in the country? One, the mobilization, how people are responding, and even how the taxman in URA is actually addressing this matter to the people.
Wow, so over the last about, I think 8 years now, the Tax Justice Alliance, that's now the umbrella on issues of taxes, has been conducting engagements on mainly issues of tax and domestic resource mobilization. And over the years, we've seen progressively a tendency of government trying to do more into trusting civil society. Of course, we have had many amendments being taken on, and one of the amendments was the environmental levy on cars. Although the spirit in which it came, it ended up being a little bit twisted, because we initially wanted most of that money to cater for, the damages that these pollutions do to our environment. And of course, it was in the spirit of catering for the climate change that is now hitting us hard. So in that spirit, we always have alternative proposals that we submit to Parliament, but also, the tax cycle is long. First, it's we make recommendations, and then to finance. Then when these recommendations are received by Minister of Finance, they compile the tax bills. Then after compiling the tax bills, then we review the tax bills. And these bills are then discussed in Parliament with the parliamentary finance committees. So it's at that stage that we dialogue and, we agree that we should take this out, maybe this should stay. So sometimes we've had some wins, and of course we've had some losses, especially that government sometimes has a position on a matter. When government wants to raise revenue, sometimes it will look at all possible sources on how it can raise that revenue. And sometimes also when government wants to discourage something, it will look at possible means to ensure that it discourages. For example, we had the OTT that was one of the most unpopular taxes. So when OTT came, regardless of the benefits of social media, government's position was that we don't want this thing to continue the way it is. So social media was taxed, and during that year, we saw that most Ugandans were a bit limited to the use of social media until we started using VPN, though there are some things that VPN can't use. And then also the mobile money tax that was initially passed at 1%, and our stand was that it should either be scrapped off or at least be maintained at 0.5%, and we saw that being reviewed. So as civil society, every year we come on board and try to have these engagements. And also when the bills are passed, we also go ahead to engage citizens in understanding more of these bills and how they can make a contribution to them. And also we include the private sector, because they are mainly the custodians of the tax laws. So in this year, we've seen quite a number, though the most noticeable thing is that government hasn't increased so much on taxes. Most of the taxes have either remained the way they were, or they have been reviewed downwards in the spirit of economic stimulation, ensuring that the economy grows, but also ensure that businesses that have been struggling due to COVID can re-stabilize. So in this year, we are seeing mainly cuts in excise duty, in VAT, in income tax, and in all the regimes. And we think that's a good thing. And also the other thing we have noted is, we are in the era of trying to combat illicit financial flows, those unregulated and not cross-border transactions. And you want to see that less money goes out of the economy. And one of the easiest ways that most people have been doing it is through hiding their details under either companies or under certain names or figures. So people create schemes to evade taxes, and before you notice who the real benefactor of some of these schemes is, money is already lost. So URA is trying to comply with certain international standards on automatic exchange of information for mainly tax purposes, and we have reviewed some of our definitions on a beneficial owner to include details of that natural person who really has ultimate power or authority or ownership over an entity.
We've also learned that you're heading to Parliament today.
Yes, yes.
So one of the what are those things that we should expect from the discussions you're going to have with the members of Parliament?
Yeah.
What are those mainly?
So those are, of course, the same I'm trying to bring on board, like the definitions of beneficial owner, where I want to see companies or URA probing for the real end-time owner of a business or an entity. So that has been reviewed, and we agree with it. We have seen some exemptions on Bujagali, where they had an initial holiday, and now a more 5-year holiday has been extended. And as civil society, we think our position is some of these guys, they never file returns. Once they are exempted, they don't file returns. So we are not able to know how much revenue we have foregone. So our position is that before the extension is done, at least we need to have an assessment. Though our initial position was that we don't need this exemption more. We can give them more subsidies without exempting on taxes, because that's where the country benefits most. And then also we are looking at our country, like I started, that we are so generous to investors. So we have a provision.
The government says they provide employment opportunities.
It depends on what employment opportunities. So, for example, we've seen areas we don't have a minimum wage assented to currently. So you'll provide employment opportunities to, let's say, 1,000 people, but that money given to 1,000 people, it's perhaps equal to maybe a salary of 10 guys within the same company, but occupying the top positions. So that's prone to negotiation on what kind of employment they are really giving to our people. But most importantly is that, we give investors exemptions, but then we never go ahead to study what revenue we lose as a government.
All right.
So the provision was that an investor setting up a manufacturing plant in some of the established sectors, they'll have an exemption if your capital is about $35 million. But this money, many investors can afford it, and unfortunately for Ugandans to qualify for this exemption, you have to invest about $5 million. And in our argument, we are saying, let's provide the requirements, the basic requirements for investment. And those are mainly the forms of production. Let's work on the infrastructure, let's work on the electricity. And this will pull our investors. And when they come in, let's tax them instead of giving them the holidays, because what we need mainly is the tax. And it's most of these guys that would give us the tax. And if we are to give exemptions, we think currently we want to promote more of domestic direct investments than the foreign direct investments. And in that context, you'd want to see more locals investing than the foreigners, especially also when we go in the spirit of foreign export
exploitation of labor.
Substitute.
Okay.
Want to substitute exports and promote want to substitute imports and promote exports.
David,
So
I want you to
see
also.
more locals.
Sorry to cut you short.
Yeah.
I want you to also mention something about. I want you to highlight something about the civil society alternative tax proposals for the upcoming year, financial year that we're actually heading into come June.
Yeah.
So I would want to know what are your proposals mainly?
So some of those we agree. Like when we talk
with the government or with the ministry?
With the government, of course government includes ministry. So when government proposes, for example, to continue giving these guys, the investors, investing $35 million incentives, our position is let that be dropped. And in case we were to go ahead with...
And the government did agree?
No, it's what we are presenting today. Unfortunately, So after presenting, we shall see what comes out, whether they agree with our positions or they don't. And it was the same provision with the definitions on beneficial ownership, where we were saying that we agree that that should be there, and we want to see more faces behind the companies that are being set up. And we also want to see all these tax expenditures, revised. Like I said initially, we lose about 1.4 trillion Ugandan shillings. And you see that money is about the entire budget for the agriculture sector. So in other words, the entire budget for agriculture is foregone through exemption. So we believe if we are to do some work in that, we shall have a plus. And of course the other exemption I was telling you is the one of Bujagali Falls, Bujagari Dam construction, where we believe that these guys should now be taxed and let them start filing returns. If government wants to give them exemptions, at least they should do a study of the performance of the previous exemptions before we go to fresh exemptions. And then also we have something on exempting income taxes on people that intend to develop, especially hospitals. And the investment was about the equality of a referral hospital, but then that was initially dropped, and we still believe that that should be dropped. If someone is to invest in a health sector and you want to give them incentives, someone also will want to invest in schools and they'll demand for incentives. And then even the doctors will also come out and say we are providing essential services. We also need incentives. So we think this shouldn't be the case. Then also, there are also penalties that have been introduced on failure to file returns, and that was between 50,000 to 500,000 US dollars. And for us, we think it's good to maintain a penalty on failing to file returns, but also we want to make it so high so that, companies are obliged to comply. When it's so low, someone assesses the revenue he would have paid vis-a-vis the penalty. And sometimes when the penalty is minimal, you'd rather commit the offense and pay the penalty. So for us, we want it to be a flat of $500,000. $500,000, that would come to about $1 billion and about 1.8 billion Ugandan shillings. So that when you fail, you know that's there. And of course, it will push you to file your returns. And then under the VAT regime, of course, we have seen issues of want to see more exemptions in the health sector. And one of the things that came on during the COVID period was exempting supply of oxygen. But oxygen is used for various things, even in industrial manufacturing and stuff like that. So in this amendment, it had been proposed that oxygen is exempted specifically on medical supplies or medical oxygen. And for us, we also agree as civil society, because sometimes people take advantage of these things. It's like the law that was introduced on cars, where guys bring cars claiming they are going to Kong and they end up being sold.
Flooding inside here.
So that's one of those. And also,
still with what you're going to propose today, right?
Yeah, these are all being presented today. Then we are moving towards ensuring that women don't incur so much cost when they go through the menstrual cycles. And we started with discussions on zero rating supplies in menstrual all items related to menstrual hygiene. And in this year, we are also proposing or agreeing with the proposal to provide exemptions on menstrual cups. Menstrual cups, I think ladies understand them more, because they said these are more reusable and they are more sustainable. So there are quite proposals that have come in. There are many, and these cut across. There is the income tax, there is the VAT, there is the excise duty, and I think among the excisable duty is we are reviewing the definitions of fruit juice to include strictly things from natural fruits, the juices from natural fruit. And one of the amendments then is what comprises to be the fruit juice and what should be taxed or what should be exempted. And under fruit juice there is something called pulp. So pulp is that concentrate of the fruit juice.
As we are summing up though.
As we sum up, yes. So on the pulp, it was proposed that 30%, if your fruit contains 30% or beyond of pulp, you should be exempted. But we did a study and realized that most of the juices we consume are below 20% of the pulp. So we think this is a white elephant. White elephant is something you promise, but it won't be fulfilled because it's non-existent.
It won't be implemented.
So we believe that should be dropped, because if we are to suggest that we reduce on the percentage of the pulp, then government will forego taxes.
Should we expect the civil society organization to mention something about the Vinci coffee deal today?
Unfortunately, the Vinci coffee deal goes under budget, but it's also under the tax exemptions that we are trying to see that they are foregone. But also when you look at the definition of beneficial ownership, if we are to have a more detailed definition on beneficial ownership, we would want to know who is behind Da Vinci. So if you're able to tell the person behind Vinci, then you're able to know who is the real benefactor of this exemption or this scheme, if it's to go ahead. And then as Ugandans, we can then have a fair debate whether to exempt or not to exempt. Because I think from the previous studies, realized that most of the investors in the Vinci and then the Luoa, most of them are newbies or newcomers in the type of investments they want to do. They don't have experience in that area. So we want to know what informs government to give these guys such investments or such incentives when they don't have experience in most of these sectors.
All right. Thank you very much. And that is coming in from David KIZITO, who is coming in from Transparency International Uganda. And we've been discussing, among many things, taxation and also trying to look at the physical justice structure in the country as well. And Joram Paul Sonko, it has been a wonderful time with you this morning. It has been cold in most of the areas in Kampala, but I do hope business is moving on as usual. Smart Means Business does end at this particular time. We shall resume tomorrow, same time, from 7 a.m. It is 6 minutes to the top of the hour. And coming up is Financial Markets with Anthony Sebale. And clearly, you're going to understand more of the widescape of stock markets on the African continent and in Uganda. So keep it here on Smart 24 TV as Anthony takes you away with Financial Markets kicking off at 10. I'm Joram Paul Sonko. Good morning.